Ever wondered about the main differences between MT103 and MT202? Let's begin by understanding Swift payment messages, which are standardized formats used by banks and financial institutions worldwide for secure communication. Among them, MT103 and MT202 play a key role in international fund transfers. MT103 is a customer credit transfer message primarily used for direct, one-time payments between accounts, such as supplier payments or salary transfers. In contrast, MT202 is a financial institution transfer message, facilitating bank-to-bank transactions. Essentially, while both MT103 and MT202 are Swift message types used in international payments, they serve distinct purposes at different stages of the transaction process. Now, let's unfold the characteristics of the MT103 message. MT103, as a Swift message type, is specifically a customer credit transfer message. It's used for making a single, one-off payment from one account to another. This is your go-to message type when you're dealing with direct payments between two parties. Think supplier payments, salary transfers, or customer-to-customer transfers. The content of an MT103 message is comprehensive, providing a complete record of the payment transaction. It includes detailed information about the sender, receiver, beneficiary, payment amount, currency, and any additional payment instructions. In terms of usage, MT103 messages are typically used when funds are being transferred directly from the sender's account to the beneficiary's account. It's often used for low-value, high-volume payments. Moving on, let's break down the MT202 message. The MT202 is a financial institution transfer message specifically designed for bank-to-bank transfers. Now you might be wondering, what does an MT202 message contain? It carries information about the sending and receiving intermediary banks, the correspondent banks involved, the transaction amount, and any relevant payment details. Essentially, it's the instruction manual for moving funds between banks. Here, typically, one or more intermediary banks are involved in processing a payment. These banks act as the middlemen, facilitating the transfer of funds by routing the payment through correspondent accounts. Now that we understand MT103 and MT202 separately, what sets them apart? Well, MT103 is a customer credit transfer message used for direct payments between two parties. In contrast, MT202 is a financial institution transfer message used for bank-to-bank transfers, specifically for intermediary banks. The sender and receiver in an MT103 transaction are typically the parties directly involved in the payment, while in an MT202 transaction, the sender is usually the originating bank and the receiver is an intermediary bank. Furthermore, the level of detail in MT103 messages is quite high, providing complete information about the payment transaction, while MT202 messages focus more on the movement of funds between banks and may not contain beneficiary information. In summary, MT103 messages are used for direct customer payments, while MT202 messages are used for bank-to-bank transfers. Grasping the differences between these message types is crucial for efficiently processing international payments and managing correspondent banking relationships.